Hello, everybody. Welcome to the Multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles. For those of you who do not know me, I am a commercial mortgage broker and the co-founder of Adventure Commercial Capital. We are going to talk about today's agenda first, if you want to go to the next screen. So today's agenda, we're going to talk about our community ecosystem. If you are a Freedom Chasers, go ahead and put 1 in the chat. That means if you are on their Facebook page, on our Facebook page. There you go, Logan, JJ, Sandy. All right, good. If you are not a Freedom Chaser, I'm not done with that one. If you are not a Freedom Chaser, go ahead and we're going to share the link here, and then you guys are going to go and become a Freedom Chaser because we're going to talk about our ecosystem and the benefits of it. Then we're going to do an introduction. We want to know who you are. We want you guys to raise your hand and come up and introduce yourself to not just us, but everybody on here and get to know each other. We connect on this group. Then we're going to do a current debt market update. Then Jerry's going to do takeaways from the Bring Your Deal workshop that he did with Grant Cardone 2 weeks ago. Our last call was 2 weeks ago, so that's why we didn't get to do any takeaways. So he's going to do his takeaway today. And then we're going to have the main topic, which is understanding DSCR. And then we're going to have an open time for Q&As. All right, let's get into the ecosystem. So I see a lot of you here are Freedom Chasers. If you are not, JJ just shared the Freedom Chasers Facebook link. If you guys can grab that link and you get on here, you will get access to each one of these calls on the screen. On Sunday nights at 8 p.m., we have the Multifamily Activation Zoom with Marcel, Trevor, and Victor. Those are the Freedom Boys who started this ecosystem. You will get activated for the week with celebrity guest speakers that they have on there each Sunday night. You have unrivaled education values and community building at its finest. On Monday, you're going to be connecting with Peter St. Martin. He does broker talks at 2 p.m. And the reason why he does it at 2 p.m. is because he does live broker calls. This is very beneficial because you're going to learn from action takers on how to talk to brokers and learn that lingo that you need to talk to brokers with, because brokers can smell a newbie from a mile away. So you're going to get on there and you're going to learn how to get deals coming your way consistently. On Tuesday night at 8 p.m. we have Aldo, Will, and Ed. They do their napkin underwriting. You're going to learn to spot the best deals with fast and efficient underwriting, and you can actually bring your current deals to review it with the leaders together. On Wednesday night, you have, on alternate nights, you have yours truly and Mr. Jerry Miles there, who will be talking. We do our Freedom Chasers financial Zoom. You're going to learn what it takes to find and qualify for debt to take down the big multifamily deals. And on the alternate Wednesday, you have advanced underwriting with Victor. You're going to get educated about economic principles and how to deep underwrite after the deal has been passed the napkin underwriting test. And that's it for our community ecosystem. Like I said, grab that link there. If you haven't joined the Freedom Chasers Facebook yet, just go ahead and grab that link and go ahead and join. You will get updates on each Zoom every night. Jerry, you go ahead and take this one.
All righty. Thank you. And so we are the Miles. That's my beautiful wife there, Shelly, that you guys were just hearing from. And so just a little bit about us. We've got 3 boys. That's JJ and Jordan that you see there in the picture. Riley, I don't think is on the call here tonight, but a lot of times he is on the call. But we are commercial mortgage brokers. We started Adventure Commercial Capital about 3 years ago. we'd been in the commercial roofing business for 20 plus years. Done all types of work, from government work and shopping centers, and just a little bit of everything in between. Started investing in real estate, and saw a need for honest people to deal in the finance world. We'd had some runarounds, and didn't feel like we was being treated real fairly by some different brokers, and saw the opportunity, and so we took it. 3 years now we've been in this business, and it's going strong. And we're in the business to help people, and we think if we help enough people that we are going to be able to grow a big business with it, and do well for ourselves as well. So that is us. And this is our contact info. That's mine and Shelly's emails, and then that is my personal cell phone. So feel free to reach out if you guys ever have any questions or issues or anything with debt, or need quotes or anything. So, and go ahead, babe.
Sorry, I was muted there for a minute. Okay, I have an announcement to make. So I want you guys to join us for a MFC special Zoom tomorrow night, 5/18 at 8 p.m. Eastern Standard Time. This is going to be hosted by Trevor Walker and Mike Bailey from Massive Capital, and also Dr. Paul Sink. This Zoom, you're going to gain insights from industry experts at Massive Capital on alternative real estate investing and how to diversify your investment in these economic times. We will share that Zoom link. If you want to go ahead and share that Zoom link, Jerry. In this special Zoom, they will cover the following topics. Why diversification is important in today's economic climate, how to select the right mix of assets for your portfolio, strategies for managing risk and maximizing return, the role of alternative investments in a diversified portfolio, and tips for rebalancing and optimizing your portfolio over time. In addition, guys, you will learn about the innovative approach that I automatically want to say 10X. You will learn about the innovative approach that X Space is taking to transform the traditional real estate industry. You will discover the benefit of passive investing and how you can diversify your portfolio with commercial condos that cater to your unique need. Again, Jerry, did you share the link? I can't see. If not, I will share it.
JJ is sharing it.
Well, this is a different link. I don't know if he has it.
I just told him.
Okay.
Got it.
This link will also be posted on the events section on the Freedom Chasers Facebook community. If you are a part of that, you will get notified. If not, here's the Freedom Chasers link again. And if you click on the Freedom Chasers link, guys, you will be in the loop for all of the Zoom calls we have. Again, all these Zoom calls are very educational, and they are free. So take advantage. A lot of people charge for these Zoom calls, but we do it all for free. So there you go. All right, take it over.
Mm-hmm. All right, so I'm going to give you guys take about a minute and tell us who you are. Introduce yourselves. I can't tell you how important this is. I know that there's people. I know there's people that we are in contact with personally that have benefited from relationships that they've built on these calls. Whether you're a contractor, an investor, or whatever it is that you do, tell us what kind of investments you've done, and maybe what you do for your regular job. Raise your hand and we'll call on you and we'll bring you up.
Or even if you have a win, let us know. All right.
I see. All right, Logan.
Hey, how's it going today?
Good, man.
Doing well. Hey, nice to meet y'all. I've been on some of the other Zooms on Monday and Tuesdays. Usually Wednesdays I'm busy, but my name's Logan Pritchett, and I live in Atlanta, Georgia. I live on the Metro Atlanta side, so Kennesaw, Georgia is where I'm from and where I've grown up. And I'm 21, just graduated college, and I got my real estate license. I'm working on becoming a real estate commercial broker. I'm working with a commercial broker currently to kind of get me towards that path, but I'm also I got into real estate because I want to be a multifamily investor. And so I've been coming to stuff like this, going to networking events in Atlanta, all types of stuff, looking to partner with people, get on some deals, be a GP, and just, doing stuff like this to meet people and educate myself. But it has been a fun process, and I've learned a lot. And so basically what I do, though, I'm looking for my first deal. My goal is to get my first one by the end of the year. So
Awesome.
Wow.
Good to meet you, Logan.
I was gonna say you look really young, man. Oh my gosh, 21. That's awesome. Good for you. Put your information in the chat and everybody can connect with you.
Yeah.
Thank you for talking.
Yeah.
Absolutely. Thank you for having me.
All right, so we got JJ and then Peter St. Martin. So JJ, go ahead.
Yeah, what's up? I hit 1,000 subs this week, which is really cool. And what I've been working for like a year now. I'm doing a challenge where I'm trying to trade up from a piece of paper to $10,000, and now we're at like a $200 bike or something. It's like, I don't know the exact value, but we've been trading and we've traded up to a bike that's like a vintage bike. It's in rough shape, but like the trade value is probably $100 to $200. So that's pretty cool.
Awesome.
Good job.
All right, and Peter, good to see you. We're having trouble hearing you, Peter.
Shoot. That often happens.
We can hear you a little bit.
Yeah, very little.
I'm not sure what the problem.
There you go.
Oh,
Go ahead.
just for a second, you came in strong.
Yeah, that's strange. I don't know why that happens. But so JJ, tell us what subs mean. Tell us what subs mean.
Subs.
What is
Tell us
up?
what subs mean, JJ.
That's subscribers. That's like followers on YouTube.
There you go. All right.
Yeah.
Yeah, we old people don't know all these terms, so
Yeah.
you gotta explain it to us. So,
Yeah.
All right. Am I coming in loud now? Can you hear me now, Jerry?
You're
It's
still
coming in
real
and out.
quiet, but we're hearing you a little better.
That's crazy. This is the same setup I use all the time for every Zoom. I don't know. Not sure what the problem is, but anyway, yeah, you talked about sharing a win, and my win is just seeing these young people show up on these Zooms. I absolutely love it. I love seeing
Absolutely.
JJ here week after week, and I actually met Logan at a in-person networking event here in Atlanta, and he's been showing up and taking action, and I can't wait to watch what these kids do.
Yeah.
Wow. Yeah.
It's a lot of fun to see that. So and I'm a local lender here in Atlanta. We do fix and flip deals, mostly fix and flip for single family homes throughout the Southeast and the Southwest. So anybody looking to do their first fix and flip deal or their 100th fix and flip deal, get in touch with me. Let's put it together.
Awesome. It's good to see you on here, Peter.
Good to see you. I know I owe you a phone call, and I'll try to connect with you tomorrow.
Yeah, whenever you get a chance, give me a call.
We'll do it.
All righty. So first thing we'll go into is current debt market update. Over the last 2 weeks, rates have been inching up every day just a little bit. The last time that we spoke on here, I think our SOFR rate was at 4.8. We're at 5.05 right now. So just creeping up a little bit. 10-year treasury's up just a little bit. When you see this 10-year treasury mark and you're shopping for multifamily, just know that you can take that 10-year treasury and add 2.25 points to it, and that's probably about where you'll be when you're shopping interest rates on like agency debt, so Freddie and Fannie debt. When you're looking at bridge debt, things like that can be kind of all over the place. And a lot of them base it on the SOFR rate, or a lot of my lenders do anyway. But the 10-year treasury rate and the 5-year treasury rate is what most of the longer term debt and things like that are going to be based on. So, rates are up. We kind of go through it every week here over the last 6 to 8 months. What's that mean? That means cash flow is down on these properties as new people are trying to underwrite deals and they're getting new debt. The cash flow isn't there. Where debt is coming due. It's hurting people's cash flow. You're going to an adjustable rate, and it's hurting a lot of people, and it's all part of what they're trying to do as far as slowing down the economy. For them to slow down the economy, there's got to be some pain in somebody's side. So us being in real estate, we're the first to get hit, and then it's going to trickle down. And as other businesses and things like that need money, they're not going to be able to borrow either. So we've been getting a ton of calls here lately for people looking for lending, and I don't think that there's more people looking for lending. I think that there's just less sources out there currently for people to get money from. So all that being said, we're kind of in a stagnant market. I'll get kind of into that here in a minute. I sat and listened to Grant Cardone in our Bring Your Deal workshop for about 16 hours a week and a half ago, and some of the different things that he's looking at in the market and the way he's looking at deals and stuff now is really eye-opening as far as where we're kind of showing to where we're at in the market. So I'll move on past this one, and Freddie and Fannie still have a lot of money to lend if you find deals at work. If you've been on these calls, you've seen this. They're really looking to lend on the 5 to 50 units. They have big goals there. They'll lend on anything over 5 units, but they're really pushing to lend in this space. So, well, you might want to take a picture of this. This is just kind of where we're at right now with Freddie small balance and Fannie small balance. So 7.5 million and below. 1 to 7.5 million, this is kind of where your rates are going to be. And we're looking at 65% leverage, 80% leverage, 55% leverage, and then the numbers next to it is the DSCR. 1.2, 1.4, 1.5. And that just kind of a breakdown of where the rates are going to come in at. So take a screenshot, take a picture, or memorize it, whatever you want to do there. So I see Logan, I see your hands raised.
Hey, just to be clear, sorry, so I understand everything. The hybrid is what is a hybrid loan?
The hybrid loan is going to be it's going to be it's going to have an option in there for interest only.
Okay.
So if you're going like a 5-year hybrid, you're probably going to have 3 years of interest only, and then the last 2 years are going to be fixed at that percentage with P&I.
Okay, that makes sense. Thank you.
Yep. So here's some takeaways from our Bring Your Deal workshop. And anybody that hasn't been to a Bring Your Deal workshop, it's a workshop that's just for Grant Cardone's real estate club members. I think right now there's like 1,200 members in Grant's real estate club. Um, and it's kind of surprising that, you know, you pay a bunch of money to be in his club every year. Um, and there's 2 bring your deal workshops every year. And so you get 2 of them to come to when you join the club. And there's probably 100 to 120 people there at the workshop. So you have a chance to come to 2 of them, and it was like maybe 10% of the people showed up that are in the club. So, but at these workshops, you know, it's just all day. There will be a different person come up about every 10 minutes, and they stand in front of the group and they bring a deal, and they pitch a deal to the club. And then when they get done pitching, it's supposed to be when they get done pitching, Ryan and Grant, you know, critique and talk about the deal, and then they get a chance. People in the audience get a chance to ask questions. We usually don't get that far. You know, usually in the first couple seconds, Grant's interrupting and starts talking about what he thinks about the deal already. So it's a pretty good workshop. Just being able to hear from him and his intake, his takeaways from all the deals and what's going on in the market. And you know, to kind of give you insight on the way Grant sees the market is, he's not bought a deal in a year, or he bought one deal. He bought a deal in Scottsdale, Arizona, but that's the only deal he's bought in a year, and I think he's sitting on like 500 million or $1 billion or something like that in cash that he said he's got sitting there and just waiting to find the right deals. So, but denial, the first thing that he talked about in the workshop is he was talking about where we're at in the market cycle. And he was going into the whole cycle of, you know, you go way up this hill of the values just rising and rising and rising, and then something happens and they stop going up and they hit a peak. And so while they're at that peak, you know, there's a lot of psychological things that happen, you know, and he was talking about the different psychological aspects to the peak of, you know, well, now we're coming back down the cliff, where we're coming back down the other side and values are starting to decline and things. But what's going on right now is most sellers are in denial. You know, they're in denial, and they you know, if their property was worth 12 million bucks a year ago, you know, that property might only be worth 8 or 9 million now, as far as what you could afford to buy it for. And they just don't want to give it up. You know, they might even be losing money on it every month because of taxes going up and because of insurance and all these things. But they're saying, man, if I just hold out another year, if I just hold out a year and I lose 5 or 10,000 a month, that's way better than losing 3 million right now. You know, and that's kind of where everybody is at right now that I'm seeing, you know, on the seller side, is they're just in denial on where we're at, and they're hoping that things are going to get better. You know, and some of the things I wrote here, like my next statement I'm seeing is, from here things are not going to get better. You know, I don't know that. This is what Grant was talking about at the workshop, and you know, kind of what he was telling us is, you know, from here things are not going to get better, is what his takeaway is on the market. You know, we have a lot of companies laying people off. We have a lot of you know, a lot of things that are happening in the marketplace. You know, we own our mortgage company, but we also own a commercial construction business. And I know on the commercial construction business side, you know, the job cycle for a lot of these projects we do are 1 year to 2 years. Well, you know, over the last previously 8 months before, you know, a year ago, we were getting invitations to bid projects on big commercial projects. We would get 5, sometimes 10 invitations a day to bid projects. Well, over the last 6 months, since interest rates have gone up, planning of new projects has been halted. And I'm telling you, I don't think that we've gotten 5 invitations to bid in a month's time in the last 6 months. So So that's something else that's going to hit the market, is these projects that are on the 1 and 2 year time frame start closing out and finishing. All the people that work for these big contracting companies and things are gonna be without work, because there's no work there to replace the work they're finishing. So there's just a lot of things like that going on in the market, that he is seeing. And that was just kind of an addition on my side. But and there's a lot of loans coming due. I've heard like $1.5 trillion in loans coming due over the next 2 or 3 years. And then we have banks that are failing and not lending right now. So those things coming together, it's going to kind of be a perfect storm in the commercial real estate arena. That is going to hurt a lot of things, hurt a lot of people, and it's going to hurt a lot of businesses here, I think. So something that he talked about a lot when people were bringing deals was a master lease. Instead of going in and trying to do owner finance on deals, something that he talked a lot about was master lease. And I know there's probably some sub 2 people in the chat. When we had our weekly call this morning on the real estate club at noon today, we had a call, and Grant actually called Pace from sub 2 and had him on the call talking about sub 2 deals. So it's just new things that Grant is seeing and looking at, because the lending world and finance is not going to be providing enough capital for the things that are coming. But master lease deals, he was talking about, if you got a $10 million deal there that people want 10 million, you want to pay 10 million, but it's not going to work. You're not going to be able to get the debt for it and things. He was saying, hey, why not give them 500 grand, pay them that non-refundable, and work out, a 5% and pay them interest only for 5 or 10 years until you get a chance to either turn around and sell the building for a profit, or be able to get new debt or pay it off. And that was something he brought up on just about every deal that was presented, was master lease. Hey, how can we make this a master lease? Let's keep these the bankers out of it, is what he kept saying. But and then we talked about cap rates at the workshop. And where are cap rates? Where's cap rates in Atlanta? Where's cap rates in Fort Lauderdale or Cincinnati or wherever you're at? And the answer to that is nobody knows. There's not been enough sales and transactions to really judge of where the cap rates are right now. So, but after saying all that, this is something else he said at the workshop, and I looked it up today, and I looked it up on Google, and but he said the word crisis in Chinese, and I'm going to kill the pronunciation, but is Wei or Wei Ji, and so you would say crisis is Wei Ji, and it's Wei means crisis, but Ji means opportunity. And so, when there's crisis and there's things happening, there's always opportunity. So when we're looking at, everything going up and everything great for everybody, that's where we were, a year ago, 2 years ago, 3 years ago. We're not there right now, but where there's crisis, there's opportunity. So when you're going out to the marketplace and you're looking for deals, be looking for where the opportunity is. So there's some pictures of the event. We got to go down and see Marcel and Trevor at one of their get-togethers as well while we was there. So that was cool seeing them. And I think our next slide, we're going to be moving into our topic of understanding DSCR. And this is, we did this topic a couple months ago. And, and why I chose to do this topic is, I get calls all day, from people looking for money and looking for loans. And I hear it all the time of, hey, do you do debt service DSCR loans? Do you do DSCR loans? And And the answer is yes. You know, when you're looking at you know, getting a mortgage on a residential property, you know, you're going to be looking at DTI or debt to income ratio. Any other type of loan, business investment loan, or whatever it is, any kind of commercial real estate loan, whether it's a hotel, storage, you know, whatever it is, they're going to be looking at DSCR, and they're going to be looking at how they get paid back. So residentially, they look to see what can this person pay back. You know, in the same way in the commercial realm, they're looking at what can this person pay back, or what can this business, what can this asset pay. So, and it's essentially just the formula, a ratio that banks use to measure cash flow, or the cash flow's ability to pay the debt obligations. You know, and all business and investment real estate loans use DSCR to be able to tell if they can pay for the property. So, how to find the DSCR? So you take the yearly NOI, or net operating income, and so your NOI, if you take all the income of that property, and you take away your regular expenses, you know, any administrative fees, lawn care, electric or gas, any type of things like that you pay for, insurance, taxes, all those things that are regular reoccurring expenses, take them away from your income, and that's your NOI, okay, or your net operating income. So the next step would be take your NOI and divide it by your debt service or your mortgage payment, okay? So your net operating income divided by your mortgage payment or debt service. And that's going to bring you up to a ratio. You know, sometimes you might get one that says 0.8 or 0.9. Those aren't good. You want it to say 1.2 or better generally. And the higher number, the better. Okay. So, you know, if your net operating income is 15,000, divided by the 12, divided by your mortgage payments. If your mortgage payments, this is usually on a yearly. So if your mortgage payments are $1,000 a month, and you got 12,000 a year in mortgage payments, you divide those, and you're going to get a 1.25. And generally, that is going to be about the minimum that you can look at when you're coming after debt on commercial real estate. You know, there are special occasions where you can get a 1-to-1 loan, or a 1.15. You know, there's some lenders that will do those types of deals in certain occasions, but generally, and now in today's market, I mean, you know, a lot of them are liking to see the 1.3 and 1.4 debt service coverage. So it's pretty simple. You know, just your net operating income, which is your income after your regular reoccurring expenses. Now, if you had to replace a roof or something like that on the property, you don't take that out of your expenses. That would be part of capital expenses. Okay. So this is just reoccurring expenses on your net operating income. And then you divide that by your debt service. So question and answer, that was just pretty simple run through of it. If anybody has any questions or comments or anything like that, here's your chance to ask them. I see Shelly has her hand raised.
I was just gonna say, somebody left a question in the comment. They said, could you briefly explain the master lease agreement again, please?
Yeah.
Will, his name is Will.
Yeah. And so, yeah, I'm probably not going to do it justice as far as how the way he was explaining it. But, you know, if you have a property there, the first time I heard him talk about it, it was on a storage deal, and the people didn't owe any debt on the storage deal. you know, and they were looking to get, I think, 8 million or something out of the deal. This guy was like, I can only pay 7. You know, and Grant said, hey, you know, what if you did a master lease and just took over the property? And he's like, what's that mean? You know, and so Grant kind of walked him through it there, and he said, you know, you're going to have to make it enticing and you know, enticing for the seller. And so what he did was, hey, how about I give you 500,000 as a down payment, and that will you know, be to you, that'll be your money, that'll be non-refundable. And then he said, and you might have to pay off the agent as well, the broker on the deal. The deal had a lot of upside, but if he was going to go and get funding and things like that, I think he was going to be able to borrow like 50% of the money, and then he was going to have to raise like 4 million. And so Grant said, well, why don't you give him 500,000, take the property over, and pay him 5% interest only, and make this a 10-year period. Pay him interest only payments, and then over the next 10 years, you raise the value of the property, manage the property, and then figure out an exit strategy from there. And then, you know, you'll take this guy out at some point over the next 10 years. And the incentive to the seller is, hey, I'm getting my full price, I'm getting monthly income, and that monthly income is interest only. It's not going towards a purchase. And then that 500,000 that he was going to offer to the seller was going to be non-refundable. And so, you know, that's the way he structured that one. He was telling somebody on our call today, somebody brought a deal to the call today on our 12 o'clock call. And Grant said, hey, offer them 200 grand and you'll take the property over and pull them out of their misery. Because the guys are getting, they're getting a, like, I forget what it was, $12,000 a year in cash flow on the deal as it sits, the sellers were. And he said, offer them 200,000 and take over everything as a sub 2, and you know, put them out of their misery. And he said, and then manage it better. And you know, as you're able to, you know, I think the loan had like 7 years left on it, and it wasn't assuming the loan; it was just doing it sub 2. And so, I mean, that's the way he's telling people to structure deals now. You know, Peter's on the call here. He's a lender. We're lenders. We don't make any money when deals happen like this if we're as lenders, but you know, we're investors as well. So you know, I think it's bet, you know, and Peter will agree with me too. I mean, he's here to serve people and to do what's right by customers and things as well. And I mean, in this kind of market where we're at, this is the talk that's happening, and this is way the big investors are looking at deals right now, and probably the best way for us to look at deals. I mean, since I was there, we're shopping for deals, not real aggressively, but I know we've looked at some, and I'm thinking, man, some of these deals we've looked at, I'm going to go back and relook at them here with this kind of vision, and see if there's something that we can make happen on some of these other ones we've looked at already, you know. And so I hope that that helps explain the master lease. You know, you're not purchasing the property. Another benefit to the seller, these guys had an $8 million property. They were going to have to pay taxes on $8 million when they sold the place. And I think it was like they had built the place. They had like $2.5 million invested or something. And so they was going to have to pay capital gains tax on, I don't know, like, you know, $5 million or something like that. So it was going to be a big tax burden for them. I mean, they're probably going to have to pay $1 million and a half in taxes when they sold the place. And so doing it this way, it pushed off their tax, the tax they would have had to pay for a few years as well. So any other questions?
Q&A time, guys. Come on, raise your hands.
That's cool. We can move on here. Yeah,
Or
if you
you can
guys,
throw it in the chat like Will did.
yeah,
He said, yes, you answered his questions.
I'm gonna go ahead and go on through the
Okay.
rest of the slides. If anybody has any
Hang on
questions.
1 second. We have Lola. You don't have to raise your hand, Lola. You can just unmute yourself if you would like.
Yeah.
All right, awesome. Let me see. Okay, great. Hi, so how do you structure, well, not structure, I guess, with documentation, because like you said, in this instance, it's seller financing, I'm hearing.
Yeah, and it's not seller financing. It's just you're leasing the property from them. You're paying like a lease payment to them for a period of time, and then eventually you're going to pay them off. So there's no seller financing at all. So you
That
bring,
would be between you and the seller, like
Yeah.
whatever agreement you guys come up with.
yeah, and I can't give you any legalities of it. You know, you'd have to talk to a real estate attorney.
Okay.
But things that are important to understand when you're looking at deals like this is, you know, making sure that, you know, a lot of your brokers, your real estate brokers, Peter talks to a lot of brokers with his calls on Tuesdays or Mondays. The brokers are interested in getting paid. So when somebody comes with seller financing options to sellers, the brokers instantly turn it away and say, "Oh, my seller's not interested in that." Okay. The thing you gotta let them know right off the bat is that you're gonna pay them in full. You know, you're gonna pay the broker. You're gonna take care of them. They're gonna get their money. Okay. A lot of people are coming and offering seller financing because they don't want to come up with the money to put down on a property and things like that. And because of that, you know, the the broker gets left out of the deal. And so you got to make sure they know right off the bat, hey, I've got cash here. I'm going to pay you off. You're going to get your money. But I think this will work for the seller, you know, or run it by the seller, see what they say. And I mean, this ain't going to work with every deal. I mean, you'd probably have to present this to 20 sellers before you find one, you know. But if you present it to 20 sellers and you find one, or even 100 sellers, you got a deal now, you know. So, but yeah, I would definitely, when you can make offers like this, but then, you know, before you close the deal, before you write a check, those types of things, you know, you need to be talking to a real estate attorney and all that. So.
And the key, I mean, it's a win-win situation if you tell them like, look, hey, you will get your money you want out of this deal and I will get the deal. Because if you go to a lender, and I don't know why I'm saying this because I'm a lender, you won't get the amount of money for the deal that they would want because lenders are just not lending right now. So
Yeah, and it's a way. I mean, we talked about sellers being in denial of what their property's worth. This is a way you could probably give them what they're wanting, but still get control of the property, right? And you know, it's not going to work on every deal. It's not going to work. It's probably only going to work on a small percentage of the deals. But this is what the types of things Grant was talking about. You know, and in a couple years after people have some of these deals like this, they're going to come to people like us to refinance them as things get better. So I mean, we won't be left out in the dark forever. But you know, for right now, you need to get your hands on some deals. You know, I was given a takeaway on what we had going on at you know, the Bring Your Deal workshop, and this was probably the topic of conversation on just about every deal that came up. Was, hey, what can we do creatively on this to get the property in our hands and under our control? And so that's kind of where it is, where we're at. So hope that answers your question.
It does. Thank you.
Okay, good. All right. So needed for a quote, when you guys are looking at deals and you're wanting to know what the debt is going to be or how much debt you can get on a deal, you can take a screenshot of this, T12 rent roll, and I put OM on there. Just, the OM has all the information as far as the property addresses and all that kind of stuff, which is helpful. Summary of what you plan to do with the property, and it's nice if, when people come to me and they have a pro forma of what they want to do, and things that we will need as we're moving forward. Like, I can give you a quick quote, tell me, hey, I'm a freedom chaser, or, or something along those lines. And, I won't ask for these things right away because I know that you're rubbing shoulders with the right people. But before you can go under contract and we can issue a letter of intent and those types of things, we need SREO, or schedule of real estate owned, and a PFS, personal financial statement. So if you're newer to real estate, just an FYI, and kind of let you know how it works. If you're wanting to borrow $5 million on a property, and you're going to be the one signing on the debt, you have to have a net worth of 5 million or better to be able to sign on that debt. So, you can have 2 or 3 people with a combined net worth of 5 or 6 million to be able to sign on it, or one person can sign on. So, our next topic, we'll be talking about May 31st, be 2 Wednesdays from now. Will be from application to closing. So, and we'll be going through, the scenarios we'll be talking about are mainly based, agency debt wise. So we'll be talking about the nuances there and what's going to happen, as you sign an application, all the way to the closing date and all the way to the closing table. So. And, just another reminder to everybody, tomorrow night we have a call. The Freedom Chasers have a call tomorrow night, 8 o'clock, right? Is it 8? Yeah. And we'll be teaming up with with Massive Capital. It's another big group of real estate buyers, and a good group of guys. Mike Bailey's an awesome guy.
I think there's a this is the Zoom calls we have on Sunday at 8 p.m. We have the Multifamily Activation Zoom with Marcel, Trevor, and Victor. On Monday at 2 p.m. with Peter St. Martin. Wave, Peter, so everybody can see you. And then we have Tuesday at 8 p.m. napkin underwriting with Will, Aldo, and Ed. And then you have every other Wednesday, Jerry and I, and then with our financing Zoom, and then Victor with his advanced underwriting. And I think the next screen has the special Zoom call that they're having on Thursday, which is tomorrow. That is this don't happen every week, guys. This is just a quick
Bonus.
last minute thing that they're doing, and I want you guys to be on there and join that. Here's the link again for that. Again, I shared the link for the Freedom Chasers Zoom. If you guys get on there and be a part of the Facebook community, you will get all the links for all of these Zooms. It is very beneficial and it is free.
Awesome. And thanks everybody for being here.